Welcome back to Market on Close. I'm Nicole Petalides live from New York City. So we're taking a look at the market action that we've seen, particularly in commodities and currencies. So let's take a look here with Scott Bowers, CEO, Prosper Trading Academy. Good to see you, Scott. What a great day to have you on to talk about this, because with the action that we saw in crude oil, we saw crude oil move to 3-month highs early in the day. Then I saw it pull back, and I see it higher again. With the latest news, the Wall Street Journal reporting Saudi Arabia and Russia agree to extend production cuts as oil recovers into July. But this is contingent upon them working closely with the other 23-country coalition. And there are some concerns about Nigeria and Iraq. So I don't know. You tell me. I mean, there might still be some volatility with this, right?
Well, there's absolutely volatility. Like you said, what a range today. And we saw West Texas trade 35.89 all the way up to 8.17. That extension that you mentioned, that was, really kind of built in my opinion. The market, like you said, now they've got to get everybody on board. And I understand, real stickler to this one might be Iraq. So, nothing is set in stone yet, but it is looking pretty positive. This extension would cross all of OPEC+.
Yeah, and so as we're working on some of your audio here, we were looking at some of the energy plays, right? So I was taking a look at names such as Exxon and Chevron in the Dow Jones Industrial Average, which gained over 500 points today. And we saw Exxon up 4%. A name like Chevron, that was up 2.5%. So we saw energy stocks moving up along with energy, which was a great performer today, up over 3%. So I thought that was very interesting to see these stocks moving along. Sometimes you don't necessarily see them. And people have been breaking it down and talking about exploration and production versus midstream versus, pipelines, refiners. Any final thoughts on what's going on with oil as you see here?
I mean, it is really just steamrolling right now on the upside here. And I think the biggest thing that we're seeing is the demand has picked up, right? We had a combination of demand destruction and a glut. Demand has picked up big time now. If you look at the latest EIA report also, there was actually a drawdown. There was an expectation of a build. So much like we saw 4-6 weeks ago on the downside, we're now seeing some of those metrics really pick up to the upside. So now you're seeing the refiners and some of the big guys in the space here, the oil exploration companies, now you're starting to see the market catch up a little bit.
Tell me about the inverse relationship sometimes when we see the U.S. dollar and these commodities, and when you're looking at oil, for example, and then I want to get to gold.
Right. I was going to say gold especially. Typically when you see the dollar kind of weaken, like we're seeing right now, that's usually offset on the other side by commodities. And maybe you can say that's going on right now with oil. But then, as you just mentioned with gold, typically we see that opposite effect here. But gold, and it's probably more because of just the risk on nature to the overall market right now. That's why we're seeing gold get hit. But again, the dollar's been extremely weak, which is usually very optimistic or very bullish for gold. And today was almost the first time that we've seen in quite a while gold close below 1,700. It did trade below 1,700. It didn't close there, but it is down quite a bit. And there's a lot of pressure in that space right now because of the risk on environment now in the equity space.
Yeah, okay, so that was a great explanation because, as I said, normally you see that inverse relationship, which is what we saw today with oil, right? The dollar weaker, oil higher, gold would normally be higher too. But you make a great point. Risk on today, so people bought into everything. We talked about industrials, financials, real estate, energy, materials, utilities. Those were just some of the names in the green, some of the sectors in the green. When we talk about the weaker dollar, that also bodes well for some of these multinationals, such as industrials, right? I mean, when we talk about the dollar, just so people get a sense of where we are, the dollar sinks to March lows, right? And we saw currencies abroad in Europe, Asia, doing better, particularly after some PMI numbers there abroad.
No doubt about it. I mean, the weaker dollar, you should see these multinationals really gain. And you're seeing a lot of that in the marketplace right now. When the dollar was trading over one, when it was trading, 10, close to 101 or so, there was definitely some weakness in those stocks. But now, with this weakness, and I'm not sure how much longer it's really going to last. I think, again, this is all a function of the risk on environment. So people are selling the dollar, which had been such that safe haven asset for, the last at least 8 weeks, if not longer than that. That's exactly what we're seeing here. So there's a big push on these multinationals, and that's a big part of the equity rally that we've seen.
And you know what's interesting? Small caps. And I think that small caps, everybody kept playing the small caps and getting in there and saying, they're going to come back. And I felt terribly for those who were investing in it because they just were not participating. It was much like energy, right? It was just lagging behind. Things were hitting new highs left and right, but not the small caps. However, and in the last month or so, we're seeing double-digit percentage gains for the small caps, and the Russell today, in fact, doing better. I wonder if that is, made in the USA, less worries about trade and travel and things like that. What do you think is really driving the small caps?
So a couple things. You made a really good point that it had lagged behind for a long time. So I do think there's a little bit of catch up. But with the reopening and the optimism of the reopening of the economy, and you look to some of the financials, especially the regional banks that are such a big part of this, of the Russell of the small cap space here, boy, you talk about catch up. That's where you're really seeing it here. So the small caps have really exploded over the last 3 weeks or so, getting to a point where maybe there's some equilibrium now. They still probably have a little bit more room to go, but maybe there's a little bit more equilibrium between the small cap and the broader market here. But boy, oh boy, what a catch up it's made.
Yeah, absolutely. And just so people could understand what we're talking about, Scott, just to quantify it, 1 month, the S&P up almost 10%. The Russell 2000 up almost 15%. So it is the better performer.
Exactly.
Good to see you. Yeah,
good to
see you, Scott Bauer. Great conversation. CEO, Prosper Trading Academy. Thank you so much. Great breakdown.